How long does it take to build up enough cash value in your infinite banking policy before you can utilize the cash value? Before I jump into it, make sure to subscribe to my channel so you don't miss any other financial insights. If you're interested in learning more about infinite banking or the infinite banking concept, I've got a ton of videos for you, so hit that subscribe button and you'll never miss another video. So, how long does it take before you can access the cash value of an infinite banking policy? Really, it depends on the insurance company you're using, but I can give you some general terms of what you can expect. Now, a lot of companies will have a limitation on when you can access the cash value or the earliest you can access the cash value. The earliest I've seen is about 30 days. So you fund the policy year one, 30 days later, my clients are pulling money out to go out and create wealth or invest. Other companies will have a 6-month waiting period. Other companies I've seen up to a year long. So it's incredibly important to understand how long that wait period is when you're starting these policies on the forefront. That's one of the first things you should ask the agent or advisor, whoever you're talking to about the infinite banking policy, is how soon can I access this cash value? Now, there's got to be cash value in the policy for you to access anything, right? And that can happen in year one. Some people or some policies that are built will have no cash value in year one. So if you see your policy coming back, an illustration comes back where you put in $10,000, $100,000, $300,000 in that first year and you don't see any cash value, that's a red flag. You should be seeing at a minimum 70% of what you contribute that first year should be showing up as cash value. You can get policies that will produce almost 90% of what you put in the cash value in the first year. So anywhere from 70 up to about 90% of what you fund will be available and will show up as cash value immediately. Okay, that's a well-built policy. Now, how much of that cash value can you access? Most companies are sitting around 95%. I've seen it go as low as 90%, but anywhere from 90 to 95% of whatever's in that cash value should be available to use right away. Like I said before, the earliest I've seen is 30 days after you fund. The latest I've seen is 1 year after you fund. Now, it's important to note, this 70 to 90% of what you fund showing up in cash value, this is applicable to all policies. Whether you're funding it on a child for $5,000 a year, or you're putting it in for yourself to go out and create wealth and invest, and you're putting in $500,000 a year, those ratios do not change. So at a minimum, 70% of what you fund should be showing up. At a maximum, probably about 90% of what you fund that first year will show up as cash value. Now, a lot of people are probably thinking, well, why would I choose a company that is producing only 70% when I can use a company that's producing 90% that first year? Which is a great question. And the reason why some people choose to use a policy that might be producing a little bit less cash value that initial year is because those policies will have lower costs or ongoing costs throughout the life of the policy, whereas the other policy that's producing 90% in that first year is going to have higher costs throughout the life of that policy. So when you actually look at the illustrations and you look 15 years out or you look 25 years out, the company that has a lower initial cash value only for about the first 5 years, then it catches up, that company is going to have literally hundreds of thousands of dollars more than the company that had the higher initial cash value. So depends on what's more important to you, the long-term internal rate of return or the higher initial cash value during those, first 5-6 years. But either way, you should be expecting 70 to 90% showing up in that first year. The second year of what you fund, you should see roughly 85 to 95% on both policies, right? So whether you did the one that's showing up 70K that first year or 70%, or the one showing 90% that first year, the second year, both are going to be producing about 85 to 90%. And by the third year, it's going to feel much more like a deposit. Okay. So whatever you're putting in, if you're putting $100,000 a year in, that 100K goes in, you're going to see your cash value increase pretty much by $100,000. Roughly 100% of what you contributed will show up as additional cash value. After that third year, every year you fund, regardless of what you're putting in, every year you fund, you're going to have more than what you contributed for that year showing up in your cash value in your infinite banking policy. So to summarize, make sure you get a well-built policy. You should be seeing 70 to 90% of whatever you fund Again, whether it's $5,000 or $500,000 a year, you should be seeing 70-90% in that first year available. How soon can you access it? It depends on the insurance carrier. Most carriers will offer a 30-day window, but you want to be careful because some of the good carriers will push it out 6 months to a year. If somebody that you're talking to about infinite banking is telling you that you can't access the cash value until year 3 or 4 or 5, that's a red flag. These policies aren't going to self-destruct, they're not going to lapse, as long as you follow the steps to the infinite banking process. If you have questions, make sure to leave them in the comment section below. If you found this helpful, make sure to subscribe to my channel as it's greatly helpful, and we'll look forward to seeing you on the next video.